Currencies, we've seen the Aussie dollar fall against most of those major crosses. So let's get some analysis about how the market's likely to open then. We're joined by Chris Weston from IG Markets in Melbourne. And Chris, I just wanted to ask you firstly about the moves in the euro. It's been quite interesting, and we were hearing earlier from Stephen Dooley about, just the kind of levels that the euro could shoot up to if we do get positive announcements through in that press conference by Mario Draghi later. What are you looking at? What levels are you watching on the euro-US?
Well, I mean, the last couple of days, Bridie, we've been held up around this 126.30 level, 126.40, the downtrend, the longer-term downtrends holding things back in play, and also the May lows that we got. So, yeah, that is clearly right where we are at the moment. It's very key near-term support. I think a lot's been priced into the euro now. I mean, clearly the leaks that we got from last night suggest there's not a huge amount left that they can talk about. I think probably the one thing that could give it a little bit of a modest boost is what happens on the interest rate side of things. The market is pricing in about a nearly 70% possibility of a 25 basis point cut to the refinancing rate. If we see that being kept on hold, clearly the euro would go up a little bit more. And I think also the other thing is what they're going to be doing around the deposit rates as well. I mean, if they do cut the deposit rates and they disincentivise people to buy European assets because of negative ONIA rates or the credit, the credit markets, then that could be a positive for euro going forward. But I think it's about how Draghi addresses fixing the monetary transmission mechanism basically. And I think what we saw last night was bit more of the details. There's a lot of finer details. I don't expect to see those raw fine details coming through tonight. We now know that there's going to be a bond buying program. It's going to be unlimited, although Merkel at the moment is saying that she's happy to see a temporary bond buying program by the ECB, but she doesn't want to see a longer term open-ended unlimited bond buying program. The other issue is that we know this bond buying will be sterilised, i.e. for every euro they create there will be a euro taken out of the system, so there won't be an expansion of the monetary supply, hence why we didn't see too much reaction in gold last night. Gold would have gone off to the races had we seen a sterilised program. And I think the other issue is clearly that the ECB stand and will look to sell bonds if a country like Spain, for example, doesn't meet the pre-required determinations. Now that's a huge incentive to the Spanish, because if they sign up to these pre-commitments and they don't meet them further down the line, then basically the ECB will look to sell their holdings, and the bond market will probably get there way ahead before the ECB do, and you're going to see yields pushing right back up, if not further than where they were on the front end before. We know they're targeting the front end of the curve as well. So a lot of what has been speculated has been announced. I think the fact that the ECB will be buying these bonds on the same level as the private bondholders, i.e. they will not be senior to the bondholders, is a positive. The other issue we need to now know is when the ESM comes out and starts buying bonds, if it is ratified through the German Constitutional Court on the 12th, how will that be addressed? Will that bond buying being senior to the market? Because that is a AAA rated security. It requires them to have a seniority standard there. So they're getting a bit more complex, but there are some finer details we heard last night. But there's still a lot more we need to know, and of course we need to know that the Spanish are getting on board. So as I say, there's a lot being priced into the euro, there's certainly a lot being priced into the bond market right now, and you've got to keep an eye tonight on the Spanish 2 years. They've moved significantly now, and the yield curve there between 2s and 10s has steepened to a record level. If we do see a flattening of the curve tonight, for example, that would be very negative for the euro. So there's a lot at stake tonight, but I think a lot is being priced into that bond market. It can get better, but I think right now I'll be certainly looking to buy dips on euro.
Given everyone's waiting for that too, what's your call then for the open on the Australian market?
We've got a flat open today, Bridie. I mean, if you look at US futures from where we closed yesterday, for example, I mean, Dow futures are up about 40 points, S&P futures are up about 3 or 4 points, so that should support us today. I mean, there are things to look out for. Of course, everyone's going to be talking about the employment number. How will that affect interest rates? I think we're going to need to see quite a poor number for the RBA to really sit up and take listen, considering as the credit markets are already pricing at about a 70% probability of a September rate cut. There's a lot being priced into the Aussie and certainly into the bond market at these levels. So I think it's a pretty flat open. I think obviously the couple of stocks that everyone's going to be pointing out are Qantas. The fact is that there's going to be a press conference, I think, at 9 o'clock. I think Alan Joyce is going to be giving a press conference.
Yeah, 10 a.m. 10 a.m. we're hearing. Yeah,
Eastern. 10 a.m. Yeah, sorry. Yeah, I'm getting my UK times. I saw it's midnight UK time. I thought that was. I'm getting confused a little bit. Yeah, but yeah, okay. So 10 a.m. that would make a lot of sense. So I think we're probably going to get the finer details, whether it's a JV, whether it's a code share agreement. These are, I think, perhaps will it be priced into Qantas at these levels? levels. The other one is clearly going to be Linus today, and Linus is off to the race. I mean, it's already matching in the pre-market up 20%. Whether or not that comes to fruition is going to be very interesting. Obviously, they got it. I mean, the stock rallied 5% into the close, so someone got a bit of a sniff yesterday that this was going to happen. But they've been given their two-year license, that temporary license, of which they now can try and convince the Malaysian Atomic Energy Agency that that they will do what's necessarily, and then they're potentially going to get a full license. The problem is that the markets expect them to get about 38 million net profit, adjusted net profit at the end of the year. This now makes it very, very achievable for them to do that. So I think this is going to be clearly the stock that everyone's looking at. And if you look at Fortescue, the iron ore price down 0.2%. Hopefully we're going to see some of that real big panic selling that we saw yesterday dry up, and we're going to see some better levels for people, or the fundamental long-term guys, to get into at the moment. But yeah, it's going pretty flat open at the moment, and perhaps some cautious trade ahead of the big, huge event risk tonight.
Well, I guess then too, once it happens, I mean, how are you going to trade it? It's also, we've got, of course, US jobs data tomorrow, Fed next week, German Constitutional Court ruling. So, could you see more of the same? More of this kind of waiting for the bus in terms of trading tonight?
Yeah, well, it's just in terms of that euro-dollar trade, Bridie. I mean, I'm actually just waiting out at the moment. I mean, I want to wait either for a break of that downtrend, of which that will cause me to come in and look to go long, or I'm just going to sit on the bid, waiting for a pullback on euro dollar to perhaps 124.5 level would be a really good entry point. It's the longer term uptrend, the August uptrend that's been in place. That'd be a really good. If you think there's a lot being priced into euros at the moment, but you still think by the end of October Europe will be in a much more pleasant situation, just waiting for pullbacks would probably be the best way to play that. So yeah, I think there are risks that we could be disappointed, given the fact that we know a lot already, and I don't think they're going to give a huge amount more. So I think waiting for the pullback on that is going to be the situation. I think you've got to look at the dollar side of the equation tonight as well. And we've got services ISM numbers. So a lot of 70% of the US economy is retail composed, and the service industries are a big component of that. We get you've got to look at the breakdown. You've got to look at the employment component of that. The employment component, subcomponent of that ISM number is seen as a very good leading indicator for the non-farm payrolls on Friday. So the market will be looking at that. We've also got the ADP private numbers. That's expected to pull back from about 163,000 jobs last month to about 140 odd thousand. Again, a good number there could invoke a heightened sense that we're going to see a really good, strong payrolls number. I mean, clearly for the market to get very excited and the dollar to weaken, we need to see a disastrous number on all three accounts. But I think it's going to be very interesting. I mean, currencies right now, and I think are very, very interesting to trade. I think equities, a lot more is being priced in. I mean, if you look at the DAX, we've traded up 20.1% from the recent lows. So I think the equities, it would be very, very attractive to see a bit of a pullback in those, so it can get the balls in at better levels, I think.
Yeah, it's going to be very interesting, isn't it? Thank you so much as always, Chris, and we'll be chatting to you through the day.
Cheers, Bridie.
Chris Weston there from IG Markets. Well, given all of that, is now the time to be getting into real estate, and where